Good evening. We will continue our topic on conceptual framework and accounting standards, and this is lecture 10 covering the topic of property, plant, and equipment. So this topic is a significant topic because this affects the three components of the financial statements, namely the balance sheet or the statement of financial position, the income statement or statement of comprehensive income, and your notes to financial statements. So under this presentation, we will cover asset exchange, self-constructed assets, the recognition of assets, and the most important one, the depreciation method. I emphasize that depreciation method is an important topic because it affects your balance sheet, your income statement, and notes to financial statements. We will discover later how it affects the three components of financial statements. Let's proceed. Let's first discuss asset exchanges. Everybody is familiar on asset exchanges because most of the time, not only companies but also some individuals acquired assets in exchange for another asset. So we acquire assets in exchange for another assets. That is why it is called asset exchanges. Philippine Accounting Standards number 16 paragraph 24 provides that the cost of an item of property, plant, and equipment acquired in exchange for a non-monetary asset or a combination of monetary and non-monetary asset is measured at fair value plus any cash payment. So this is the ruling of our accounting standards about asset exchanges. So you acquire an asset by means of exchange for a non-monetary asset or a combination of monetary and non-monetary asset. As I have said, the practice is you acquired a new equipment or a new asset in exchange for an old asset. We usually call that trade-in. Everybody wants to save cost, and since the old asset is still functioning, when we acquire a new asset replacing the old one, we will include in our payment the old asset, and any difference will be paid through cash payment. That is why asset exchanges is measured at fair value plus any cash payment. Because you acquired a new asset in exchange for an old asset, naturally there is a difference. And the difference in value of the new asset and the old asset will be settled through cash payment. There were instances that when a company purchased new machine, equipment, or vehicle, the old asset will be given to the seller in exchange for a new one. Any difference in amount or value will be settled by cash. This is most commonly known as trade-in. This is a popular practice. We want to save cost. Instead of paying the selling price of the new machine or equipment, we will settle for a bargain. We will ask the seller if it is acceptable for them to give to them the old machine or old equipment as a consideration in acquiring a new equipment or machine. Of course, the value of the old machine is lesser as compared to the new machine. So any difference between the value of the new and the old will be settled in cash. The exchange is recognized at carrying amount if the exchange transaction lacks commercial substance. What is the general rule? In the previous slide, in accordance with the Philippine accounting standards that we mentioned, the value of the asset should be measured at the value of the amount of cash and the value of the exchange. But in this ruling, the exchange will be recognized at carrying amount if there is no or lacks commercial substance. Let's explain the meaning of commercial substance. An exchange transaction has commercial substance when the cash flows of the asset received differ significantly from the cash flows of the assets transferred. What do you mean by cash flows? We are talking here of the benefit that the asset will give us. Of course, if you will acquire a new machine or new equipment, the cash flow is greater. We expect more benefit from the new machine or vehicle or equipment that we acquired because it is a brand new asset. The expectation is that it has high productivity, so the cash flow is greater. Whereas the old machine, we cannot expect that the old machine will give the same benefit as the new machine. So the commercial substance is focusing on the difference between the benefit that we gain from the new asset as compared to the old one. So if there is a substantial difference or significant difference between the benefit being given by the new asset as compared to the old one, there is no commercial substance. That is what we meant by commercial substance. The benefit that we can derive from the new asset is far beyond the benefits being given by the old asset. So, that is the commercial substance that we are referring to in this explanation. So here is my own explanation. If the machine given by the company to the seller is too old, it is too old. We are talking here of asset exchange. We acquire a new machine. In exchange, we gave to the seller as one of our payments the old machine. But the machine is too old and almost obsolete. In exchange for a brand new machine, In this case, there could be no commercial substance. This is because the old machine will not be functioning significantly and would not provide so much benefit. So by means of this explanation, we can see clearly the meaning of commercial substance. If this is the case, how will you measure, how will you recognize the asset? It will be recognized at carrying amount. It is very clear in this explanation of the standard. It will be measured and recognized at its carrying amount because the difference is very significant as far as benefits are concerned between the new asset and the old asset given to the seller. So let's discuss self-constructed asset. Self-constructed asset is applicable not only to improvements of the building, construction of building, but also in the construction of machines and equipment. There are some companies who constructed their own machines and equipment is specifically being used in a manufacturing concern. So the self-constructed asset includes the following. The first one, direct cost of materials. I think you are all familiar with direct cost of materials. These are the materials used that is significantly related to the asset being constructed. Next, direct cost of labor, the amount of salaries paid to the personnel who directly involved in the construction of the asset. And number 3, indirect cost and incremental overhead is specifically identifiable or traceable to the construction. Indirect costs, these are the expenses incurred related to the construction of the asset, but the relationship is indirect. It is part of the cost because you cannot complete the asset without this indirect cost, but the relationship, as I have said, is indirect. On the other hand, when you say incremental overhead, these are the additional cost or the additional expenses that we incurred. Usually, these additional costs are unanticipated or not included in the original plan. But since we cannot finish the construction of the asset without this incremental cost, this should be included in the cost of the self-constructed asset. So indirect costs are the amount spent in constructing the assets, but its relationship is not direct. So these are the examples for you to have a clear picture of indirect costs. Examples are the salaries of helpers. The helpers are the one who assist those skilled worker doing the labor to finish the asset. That they are just helpers only. They are related to the construction, but their assistance is not directly related to the construction of the asset. And also cost of office supplies and designing the machines and other indirect expenses. When it comes to incremental overhead, as I have said, these are the expenses not anticipated. These are the additional expenses that need to be included in the construction because without this we cannot finish the construction of the asset. So incremental overhead are the additional amount spent in building the machine which was not included in the original plan, because there is no such thing as perfect plan. It is just a plan of the things that we should do in the future. But in the actual implementation, we cannot say that everything are all written in the plan. That is why we have the incremental overhead, additional expenses in building the machine or any asset, additional expenses, additional cost not included in the original plan, because there is no such thing as perfect plan. Next. So here is the ruling of Philippine Accounting Standards number 16, paragraph 22, regarding self-constructed asset. So this ruling provides that the cost of abnormal amount of wasted material, labor, or overhead incurred in the production of self-constructed asset is not included in the cost of the asset. So we are now talking here of exclusion. We are not supposed to include this amount or cost in the value of our constructed asset. Why abnormal amount? Why wasted material? Why wasted labor or overhead? Is it natural for us to incur expenses for wasted material, wasted labor, or wasted overhead? Can we avoid this abnormal cost? So let me explain the meaning of abnormal amount of wasted material, labor, or overhead. Amount of wasted material, labor, or overhead refers to the unavoidable errors in the construction and or the unintentional inclusion or purchase of defective materials in the production. So there is no such thing as perfect plan. In the same manner, there is no such thing as perfect implementation. Even if you have the best plan, you cannot avoid errors. Because when you commit error, there is a corresponding cost. There is a corresponding amount in your error. That is why those errors resulted to wasted material, labor, or overhead. During the construction of the asset, your workers committed errors, and because of those errors, materials are wasted. But you have to still to pay your workers. So the amount that you spent in this abnormal amount are not supposed to be included in the cost of your asset. The reason why it is excluded in the cost of the asset is that the amounts incurred did not contributed in the total completion of the asset, meaning to say, it has nothing to do with the completion. This amount that we spent has nothing to do in order to finish the asset, in order to finish the construction of the asset. Meaning to say, we can do away with this cost. Our asset, once finished, will push through with its operations even without this cost. It has nothing to do. That is why the logic is that this cost have no contribution in the completion of the asset. Let's discuss the recognition of property, plant, and equipment. This means the items should be removed from the statement of financial position, including accumulated depreciation. There were so many reasons why assets are to be recognized. The number one reason is that the asset is no longer functioning as intended. The asset no longer give benefits to the company. The asset no longer contributed in the generation of revenue for the company. In that case, the asset should be recognized, meaning to say it should be removed from the statement of financial position, including the accumulated depreciation. So when we recognize the asset, most of the time it is being disposed or being sold. So the gain or loss from the recognition of an item of property, plant, and equipment shall be included in the profit or loss. So gains shall not be included in the revenue but treated as other income. So this is the ruling of our accounting standards with regards to the recognition of assets. Next, let's now tackle fully depreciated property. What do you mean by fully depreciated? When we say fully depreciated, in the accountant's point of view, an asset is fully depreciated if the original cost is equal to the accumulated depreciation. So it is fully depreciated, the amount is fully exhausted as far as accounting treatment is concerned. So what do you mean by fully depreciated property? So this means the cost of the asset and the accumulation are equal amounts in the books. The accumulated depreciation and the cost are with equal amount. Most companies are still using the asset even if it is fully depreciated. This is the industry practice. Some assets are still functioning, physically functioning. But if you are going to look at the books of the accounts, you can see that it is fully depreciated, but still being used by the company and considered productive asset. Entities are encouraged but not required to disclose fully depreciated properties. Even if the assets are fully depreciated in the books of accounts, the ruling is that disclosure is encouraged but not required. Meaning to say, if you will not disclose, there is nothing wrong. But if you will disclose, the better. So here is my reflection regarding this ruling. In actual practice, fully depreciated properties but still being used are disclosed in the financial statements by providing a 1 peso amount as the net book value. In order for the asset not to be removed in the balance sheet, they provide a 1 peso net book value. How is this being done? Example, if the cost of the fully depreciated asset is 10,000, that is the original cost, it is fully depreciated, the company will adjust the accumulated depreciation to 9,999, hence leaving a net book value of 1 peso. So that is what we meant by disclosure in actual practice. Because ideally, if the asset is fully depreciated, the cost is 10,000, the accumulated depreciation should also be 10,000. If that is the case, the asset should be eliminated in the books of accounts. But in order to retain that asset, they will adjust, or the company will adjust the accumulated depreciation so that the net book value has a value of 1 peso. In our example, if the original cost of the asset is 10,000, originally the accumulated depreciation is also 10,000, the company will make an adjustment to reduce the accumulated depreciation to 9,999, leaving a net book value of 1 peso. Meaning to say, the asset is not removed in the balance sheet. It is still there with a net book value of 1 peso. So let's proceed now to depreciation. And here is the concept of depreciation. In your fundamentals of accounting, depreciation was also discussed. The logic behind why we have to provide depreciation expense and accumulated depreciation as an adjusting entry is to spread the cost of the asset throughout its estimated useful life. So let's discuss the concept one by one. Depreciation is defined as the systematic allocation of the depreciable amount of an asset over its useful life. The asset has a useful life. So, the original cost of the asset, which is reflected in the balance sheet, should be allocated over its useful life. And the amount allocated will be reflected in your income statement as depreciation expense. The objective of depreciation is to have each period benefiting from the use of the asset bear an equitable share of the asset cost. Here we want to reflect, we want to express that the asset gives benefit to the company, and that benefit will be expressed in terms of depreciation expense. The depreciation expense is the allocated cost of the asset every year. That means every year there is a share in the cost of the asset because the company benefited in the usage of that asset. Depreciable amount is the cost of the asset less the residual value. What do you mean by residual value? That is usually being included in the computation of depreciation. The cost of the asset less residual value. In the layman's point of view, when we say residual value, it is the selling price of the asset if it was fully depreciated. Because in most instances, even if the asset is fully depreciated, no amount in the balance sheet, but still you can sell that asset in a certain price, and that selling price or disposal price of the asset when it is fully depreciated is called residual value. So residual value is the estimated net amount currently obtainable if the asset is at the end of the useful life. This is subject to review every reporting period. The residual value according to the standard is subject to review every reporting period. Meaning to say, we have to evaluate the reasonableness of the residual value that we reflected in our balance sheet as part of the computation of the depreciation expense of our asset. So here is my own reflection on residual value. It is simply explained as the estimated selling price of the fully depreciated asset. Because there is no certainty on the correctness of the estimate. Nobody can say that the residual value is accurate. Nobody can say that it is really the selling price or the disposable price of the asset. We need to review the amount provided every end of the reporting period or every end of the year. This means the amount of residual value is always subject to change. We need to review because nobody is sure. Nobody is certain. We are not 100% sure that the amount of residual value that we reflected in the computation of our depreciation is accurate. That is the reason why we have to review every end of the reporting period or every end of the year. So let's discuss the factors in determining the useful life of an asset. It is not a simple estimate. We have to consider these 4 factors before we arrive at an estimated useful life. Number 1, expected usage of the asset. When we say expected usage, how long will it be useful to the company? We will estimate, are the assets still useful at the end of 10 years? If in our estimate it is usable even up to 10 years, therefore the estimated useful life may be 10 years. Number 2, expected physical wear and tear. This means how would the asset be durable enough to cope up with the units of production, or how frequent is the repair due to breakdown. So wear and tear refers to durability of the asset. If we can estimate that the asset will be durable up to 10 years, therefore we can conclude that the estimated useful life is 10 years. Next, technical or commercial obsolescence. This is mostly applicable to computers and other high technology machines. New models are always seen in the industry that makes the machine obsolete. Take note of your mobile phone that you are holding right now. Maybe today that is good enough, that is the latest, but nobody can say that tomorrow that mobile phone may be obsolete. And the same is true with assets. If you have a computer equipment today, take note, the computer is always subject to obsolescence because every now and then we can see new models of computer with updated functionalities, always new functionalities. So this technical or commercial obsolescence is also one of the significant factor in determining the useful life of an asset. If you can feel that your computer will not become obsolete for the next 10 years, therefore your computer has an estimated life of 10 years. Next, legal limits for the use of the asset. If the company made an improvement to the premises being rented, the life of the improvement should end on the term of the lease contract. You are renting a certain space. You do some improvements. In accounting, when you do improvements, the amount you spent in improvement is also an asset. We call that leasehold improvement. So, you improve the premises that you are occupying and renting right now. but your lease contract is only 5 years. Therefore, the life of that improvement will also be 5 years. It is not supposed to go beyond the term of the lease contract. A certain place. So let's now discuss depreciation method. Depreciation method was already discussed in your fundamentals of accounting. But we will discuss this again because this is the most common topic being discussed in the CPA review and also most problems being given in the CPA licensure examination. So depreciation methods shall be reviewed at least every end of the year. So if you are using this method of depreciation, the ruling of the accounting standard is that you have to review your method. What is the reason? What is the logic behind the review? We want to determine if the method being used is reasonable enough. We want to determine if the method being used reflects the true amount of our depreciation expense. So this is because the company should determine the reasonableness of the methods used, because even if you recommended this method today, we are not sure if that method is still applicable in the succeeding years. So always think of the regulators. The number one regulator that is very much concerned with our depreciation is the Bureau of Internal Revenue. They want to make sure the reasonableness of the depreciation method being used, because some companies are using this depreciation method to reduce the amount of tax liability. Next, if there has been a significant change in the expected pattern of economic benefits, the method shall be changed. What do you mean by significant change in economic benefits? Formerly, you are using a straight line method of depreciation. You have determined that the life of your asset is only 5 years. But based on your evaluation, you have proven that the assets can provide more economic benefits, meaning to say, the asset will last for more years, more than 5 years. If this is the case, you will do some change, either in your depreciation method or in the estimated useful life of the asset. So this is my reflection. If the company found out that the machine is operating and producing more output without so much repair, the estimated useful life can be longer. As I have said, if you can feel that you have to change the depreciation method because of this change in economic benefits, you can do so. Next, such change shall be accounted for as change in accounting estimate. This is the things that I want to emphasize at the beginning of this lecture. This topic affects balance sheet, income statement, and notes to financial statements. Why? Because your asset is reflected in the balance sheet. Proper recognition and measurement should be exercised to make the balance sheet fairly presented. In the same manner, depreciation expense is reflected in your income statement. Reasonableness of depreciation expense should be exercised to make it fair on the eyes of everybody, especially the owners and investors. And if you do some changes in your methods of depreciation, if you do some changes in the estimated life of your asset, that changes should be accounted for as change in accounting estimate. And what part of financial statement will you reflect the change of accounting estimate? This shall be disclosed in the notes to financial statements, meaning you will do a narrative explanation why did you change your accounting estimates with regards to depreciation. Next. So, let's now discuss the different methods of depreciation. The first one and the most commonly used method of depreciation is the straight line method. The straight line method functions of time. The straight line method focuses more on the function of time rather than the function of usage. In other words, the company is more concerned on the number of years that you will utilize the asset rather than its capacity in usage. So let's have an example. Example, we acquired an asset. The original cost is 500,000. We will use the straight line method of depreciation. And another example, the residual value or the salvage value is 50,000 pesos. Take note, some authors of the book, of different books, are using either residual value or salvage value. These terminologies are being used interchangeably by some authors. So in this case, we will use the term residual value. So in our example, the residual value is 50,000 pesos. We will deduct that value from the original cost of the asset, so the depreciable amount is 450,000. So the difference between the original cost of the asset and the residual value or salvage value is the depreciable amount. And then the depreciable amount will be divided by the estimated useful life. As an example, the estimated useful life of this asset is 20 years. So 450,000 pesos, the depreciable amount divided by the estimated useful life of 20 years, the annual depreciation using the straight line method is 22,500 pesos. What is the entry? Debit, depreciation expense, and credit, accumulated depreciation, 22,500. And this adjusting entry is being done at the end of the year or at the end of the accounting period. So that is the straight line method of depreciation. Next, the second method, production method. Under the production method, the company focuses on the function of usage rather than the function of time. So the company is more concerned on the capacity of the machine, equipment, or any other asset in production or in producing products. They are not concerned on the time, on the number of years that the asset can be used. So this is the production method. So let's have an example. Debbie Company acquired a machine for 500,000 with an estimated residual value of 20,000 pesos. Based on the evaluation of their home-based mechanical engineer, the machine has a useful life that is expected to end after producing 240,000 units of products. So in this problem, the number of years is not stated because we are using the production method. We are not concerned on the estimated useful life. We are concerned on its capacity. How many units will be produced? So based on this problem, the machine can produce a total of 240,000 units of products throughout its existence as an asset. After the 240,000 units, the machine will no longer function. That is what we meant by this production method. So, on its first year of operations, the machine produced 10,000 units. That was on year 1. It produced 10,000 units. How much is the annual depreciation of this machine using the production method? We are asked how much is the depreciation expense on the first year of operations using this machine. So here is the solution. The original cost of the asset is 500,000. As given in the problem, we will deduct the residual value of 20,000 pesos. So we have now the depreciable amount of 480,000 pesos. So that 480,000 pesos representing the depreciable amount will be divided by production capacity in units. Instead of dividing in the number of years that this asset may exist, the 480,000 depreciable amount will be divided by the production capacity in units for its entire life. Meaning to say, if the machine already produced 240,000 units, it will cease to operate. So 480,000 divided by 240,000 units, we have 2 pesos. That is the unit of production. These 2 pesos will now be used in the computation of the depreciation expense. According to the problem, the machine produced 10,000 units of products on its first year of operations. So unit of depreciation of 2 pesos multiplied by the production per year of 10,000 units, the annual depreciation expense is 20,000 pesos. So the production method is very simple, just like the straight line method. The production method focuses more on the usage of the machine rather than on the usage of time or the function of time. Next, we will now discuss the diminishing balance or accelerated methods. Under this method, we have 2. The sum of the years digits method is the first method under the diminishing balance or accelerated method. When you say sum of the years method, you will get the total of the estimated useful life of an asset. So let's have an example. On January 1, 2020, Jolea Company acquired a machine worth 300,000 pesos with a residual or salvage value of 75,000 pesos. Estimated useful life is 5 years. Compute for the annual depreciation of this machine. So we will use the sum of the years digits method. So let's prepare a table. So since the machine was acquired on January 2020 and will be used for 5 years, so the year that will be covered by this machine is from 2020 to 2024. So we have here the remaining year. Of course, the machine was acquired in 2020. The remaining year on the first year is 5 years. On the second year in 2021, the remaining year is 4 years. In 2022, the remaining years is 3 years. In 2023, the remaining years is 2 years. And in 2024, we have only 1 year. Look at the title, Sum of the Years, Digits Method. We will add the remaining years. We will arrive at 15. Meaning 5 plus 4 plus 3 plus 2 plus 1, the total is 15. We will use this data in creating a fraction in the computation of annual depreciation. So we will create a fraction. In 2020, what is the fraction? The fraction is 5 over 15 because the total of the years is 15. And in 2020, the remaining year is 5 years. In 2021, the fraction is 4 over 15. In 2022, 3 over 15. In 2023, 2 over 15. In 2024, 1 over 15. So that fractions that we computed for 5 years will be used in the computation of depreciation expense. So the depreciable amount of the asset is 225,000. Where did we get that? That is 300,000 pesos original cost minus 75,000 pesos residual value. That is why we have a depreciable amount of 225,000 pesos. That will be used in the computation using the fraction that we created because of that sum of the year's digits. We will now compute for the annual depreciation for 2020. How much is your depreciation? That is 75,000. That is 5 over 15 multiplied by 225,000 pesos. 75,000 pesos. For 2021, your annual depreciation expense is 60,000 pesos. That is 4 over 15 multiplied by 225,000 pesos. For 2022, we have 45,000 pesos. That is 3 over 15 multiplied by 225,000 pesos. Next, in 2023, the annual depreciation expense is 30,000. That is 2 over 15 multiplied by 225,000 pesos. And on the last year, the annual depreciation expense is only 15,000 pesos. That is 1 over 15 multiplied by 225,000 pesos. If you will get the total of the annual depreciation expense, you will arrive at the 225,000 pesos depreciable amount. Question: what is the logic behind why the depreciation expense is declining or diminishing? Why is it reducing every year? The reason is, when you acquire the machine on 2020, what is the presumption? What is the expectation? The machine can produce more outputs. The machine can produce more products. The machine can generate more revenues. That is why the annual depreciation expense is bigger, because the amount of revenue or the expected output is also bigger. That is the logic behind this diminishing balance. So, on the last year, 15,000 pesos is the depreciation expense because on its fifth year, we are not expecting too much on the machine. The machine may no longer functioning as compared in 2020. The machine may no longer be productive. The machine may no longer be generating revenues for the company. That is why the depreciation expense is only 15,000 pesos. That is the logic behind for this diminishing balance of the sum of the years digits method. The annual depreciation expense diminished because of the productivity expectation on the asset. Next, let's proceed with the next method, double declining balance method. Double declining meaning twice declining. The decline is 2 times. So let's discuss. Here is the example. On January 1, 2020, Carmela Company acquired a machine worth 50,000 pesos with a residual or salvage value of 4,000 pesos. The estimated useful life of this machine is 5 years. So, prepare a table showing the depreciation expense per year using the declining balance method. So, let's prepare a table. So, here is the solution. 50,000 pesos is the original cost of the machine. We will divide that 50,000 pesos with the estimated useful life of 5 years. In other words, on the first step of our computation, we are using the straight line method of depreciation. So 50,000 divided by 5 years, 10,000 pesos is the supposed to be amount of your depreciation. But we are using the double declining balance method. So the 10,000 that we derive divided by the original cost of 50,000 pesos, that is 20%. If we will use the straight line method of depreciation, 20% is the depreciation rate. But since we are using the double declining balance method, we will multiply 20% by 2, and that is what we meant by double declining balance. That is the reason why we multiply 20% by 2. 2 represents the double declining, and 40% is the depreciation rate. So take note of that 40%. We are talking here of double declining balance method. If we will use the double declining balance method, 40% is the depreciation rate because we multiply the straight line method rate of 20% by 2. That is why we arrive at the 40% depreciation rate using the double declining balance method. Let's continue. So we are asked to prepare a table to compute for the annual depreciation expense using the double declining balance method. So here are the headings. The first column is the year, and then the second column is the beginning balance of the cost of the asset, and then we have rate that refers to the depreciation rate. On the next column, we have the computed depreciation expense, and the next column reflects the accumulated depreciation, and the last column is the ending balance. How will you arrive at the ending balance? Beginning balance less accumulated depreciation, that is the ending balance. So we will indicate on the first column the year. Since the asset was acquired in 2020 and the estimated useful life is 5 years, we will use the asset up to 2024. And then we will adopt the 40% depreciation rate that we computed in the previous slide. 40% will be the basis. And in this particular column, the ending balance, take note of that 4,000 at the end of 2024. 4,000 is the residual value. Meaning to say, at the end of 2024, the net book value or the ending balance that will appear is 4,000 pesos after deducting the accumulated depreciation. So in this method, we will use the residual value or the salvage value as the ending balance of our asset. Remember that 4,000 pesos at the end of 2024, the net book value should be 4,000 pesos. So let's now proceed. The original cost of the asset is 50,000 pesos. Multiplied by 40%, the depreciation expense is 20,000 pesos. Since we are on the first year, the accumulated depreciation is also 20,000 pesos. Therefore, the ending balance or the balance of your asset at the end of 2020 or the net book value is 30,000 pesos. So that 30,000 pesos ending balance of the asset in 2020 will become the beginning balance of 2021. So 30,000 multiplied by 40%, the depreciation expense is 12,000 pesos. So that 12,000 pesos will be added to the accumulated depreciation of 20,000 in 2020. The accumulated depreciation in 2021 is 32,000 pesos. How much now is the ending balance? So, the ending balance is 18,000 pesos. Where did you get 18,000? That is 50,000 pesos minus 32,000 pesos. You arrive at 18,000 pesos. In other words, the beginning balance of the previous year minus the accumulated depreciation of the current year, you will arrive at 18,000 pesos ending balance. Next. In 2022, the beginning balance is 18,000 because that is the ending balance of 2021. Multiplied by 40%, we have the depreciation expense of 7,200. That will be added to the accumulated depreciation in 2021 of 32,000, we have accumulated depreciation in 2022 of 39,200. That 39,200 will be deducted from the balance, the original cost of 50,000. We will arrive at the ending balance of 10,800 pesos. Again, how did we arrive at 10,800? That is 50,000 minus accumulated depreciation of 39,200. Next. So the 10,800 ending balance in 2022 will become the beginning balance of 2023. So 10,800 multiplied by 40%, we will arrive at the depreciation expense of 4,320. Therefore, the accumulated depreciation for 2023 is 43,520. So that 43,520 accumulated depreciation of 2023 will be deducted from the original cost of the machine. of 50,000 pesos, and we will arrive at the ending balance or net book value of 6,480 pesos. We are now on the last year. Take note, as I have said a while ago, the ending balance of your machine should be 4,000 pesos, representing the residual value. So whether we like it or not, we have to arrive at 4,000 pesos ending balance. Let's see what will happen. So that 6,480 pesos ending balance of the machine in 2023 will become the beginning balance of 2024. If you will multiply 6,480 by 40%, will you arrive at an accumulated depreciation of 46,000? Because let me remind everybody that the accumulated depreciation must be 46,000 pesos in order to arrive at an ending balance of 4,000. Try to compute 6,480 multiplied by 40%. That is 2,592. If that 2,592 will be added to the accumulated depreciation of 43,520, you have 46,112. So you cannot arrive at the ending balance of 4,000 pesos if you will multiply 6,480 by 40%. You cannot arrive up at 4,000 pesos ending balance because your accumulated depreciation must be 46,000. So what are we going to do in this case to arrive at 4,000 pesos ending balance? Therefore, we are not supposed to use 40%. We will not use 40% here. So we will do another procedure, an alternative procedure. In order to arrive at 4,000 ending balance, your accumulated depreciation must be 46,000. Take note of that. So therefore, 46,000 is the supposed to be balance of your accumulated depreciation. Deduct from 46,000 pesos the 43,520 pesos balance of accumulated depreciation in 2023. You deduct. You will arrive at 2,480. The 2,480 will now be your depreciation expense for 2024. So if you will add 2,480 to the accumulated depreciation of 2023 of 43,520, you will arrive at 46,000 pesos, and we are now comfortable that the ending balance is 4,000 pesos. So that is how we compute for the double declining balance method. So the information and data and the standards discussed in this lecture were taken from the book written by Balix, Peralta, and Balix entitled Conceptual Framework and Accounting Standards 2020 edition. And some examples were also taken from this link, Principles of Accounting for Asset Exchanges. The explanations, you may notice the explanation in italics. These are all provided by me as the lecturer. So I want to thank everybody for listening this lecture. I want to thank you for viewing this video in my YouTube channel. And I will continue to provide lectures related to this subject matter until we have finished all the topics covered in the subject of conceptual framework and accounting standards. See you again. I hope that the lockdown will be lifted soon so that we can start again with our regular classroom discussions. Thank you very much and good evening.